Hey guys, good afternoon. It's Brett Burns here. Excited to do a live event again, here on Thursday. So like to always reach out, guys, put together some different options. So today I wanted to talk about kind of home loan programs, kind of like a 101 going through of there's so many different terms you hear out there of this program versus this program of what does that really mean? And what are maybe some of the pros and cons of each of it? So the first thing I like to categorize is there's kind of two main general categories, either government-backed loans or conventional loans. So that's kind of going to be the two pieces, guys. We have conventional loans versus government. So those are kind of the two buckets for us, right? So really the basic of a conventional mortgage is meaning a non-government loan. So it's kind of the opposite of that, right? So now in conventional, we'll start going through those. There's going to be different categories. So you've probably heard of something like a conforming loan versus a jumbo loan, or maybe even a high balance loan. So what those are referring to is within the conventional loan bucket, which again is not government loans. Within that conventional loan bucket, depending on the loan size, there's going to be different buckets it falls into. So underneath conventional, we'll have at first conforming loans. So what a conforming loan means is it's conforming to the loan amount set by the feds, or in this case, Fannie Mae, Freddie Mac. So every year, Fannie Mae and Freddie Mac adjust the loan levels. Typically, those are going up for us based on the overall prices throughout the country. So they try to say, hey, based on some different averages, we're going to allow loans to be purchased, guaranteed by Fannie Mae and Freddie Mac up to these levels. So here in 2024, that conforming loan is at 766,550. So just about 766K. So when a loan goes above 766,550, it becomes no longer conforming. Now, the next couple of tiers are either high balance or jumbo. So within those, that now starts depending on the county. So this 766 figures for the entire United States. So certain counties are deemed high cost areas. For example, in Washington State, King County, Pierce County, Snohomish County are deemed high cost. And again, that's based on average sales prices. So Fannie Mae and Freddie Mac have said, hey, we're going to have a second category called high balance conforming. So on the high balance conforming loans, these are different per county. For again, King, Pierce, Snohomish locally, that's now 977,500. So you can see a pretty big jump there for us. I mean, a couple $100,000. So, that's another piece. And then the third level would be jumbo. So a jumbo loan, guys, is anything that's above the conforming limit. So ironically, in our market, that could be anything over 766,550. So for example, if you are a buyer looking at an 800,000 loan in King County, we could actually look at a couple different options, conventionally a high balance or a jumbo. So there's multiple options for you sometimes. So it's not always just one bucket's the only option you have. Now there's going to be other places like, for example, Oregon. There is no high balance. It's very simple. Conforming 766,550, anything above it is jumbo. They have just two buckets. But again, a place like Washington or other high cost areas may have certain counties that have that third bucket of high balance. So what does all this really mean for us? So, hey, now we're categorizing. So the basic differences, guys, is when we're looking at the first two buckets, conforming and high balance, these are loans that could be backed by Fannie Mae and Freddie Mac. So what that means to you guys as a consumer is that's one bucket of rates. Oftentimes, those can be some of the best rates. The other thing, though, is it's a different set of guidelines. Again, typically more favorable. A little bit more leniency around credit score, a little bit more leniency around how much reserves we need, maybe how much time we need in employment, what our debt to income ratio is. So that's the big benefit oftentimes to being in a conforming loan, meeting Fannie and Freddie. Again, that could be the high balance bucket or the regular conforming, but the guidelines and rates typically are going to be more favorable. So that would be kind of the number one thing we're going to focus on as a client. Hey guys, would we fit in these buckets? Now, that being said, jumbo sometimes gets a bad rap. I have a lot of jumbo loan programs that can have easily the same rates, even occasionally better rates. They're just a little bit stricter guidelines, not always significantly stricter. It's just something to keep in mind when you're looking to buy at certain price points. There may be different sets of guidelines. So that's kind of, again, what the categories are. And the reason there is different sets of guidelines is who is the ultimate group buying or guaranteeing that mortgage, whether it's Fannie Mae, Freddie Mac, or we're getting into the jumbo realm, and that could be a bunch of different individual banks or investors. That's why there's a difference there. So that kind of gives you a breakdown of conventional mortgages in those different buckets of conforming, high balance conforming, and then jumbo. Now, on the other side, guys, jumping into government loans. So government loans are going to be, again, backed by the government. So what does that mean for the consumer? Guys, all these options can still be 30-year fixed loans or differences. It's just who's ultimately backing it, which as a consumer shouldn't be a major concern to you because you're still on a 30-year fixed or on any program you want. The difference is what's the set of guidelines. So government-backed loans have typically more expanded guidelines. So the first one, guys, is going to be FHA. Now, oftentimes folks think FHA is first-time buyer. It is not specific to first-time buyers. Now, it's a great program for a lot of first-time buyers because a lot more leniency on credit score, good rates. You can do minimum down. There are even some down payment assistance programs with FHA. So there's a lot more flexibility on the FHA product, but it's not specific to it. The biggest benefit here is the flexibility on guidelines and down payment. The next one is going to be a VA loan. Now, this is going to be for active military and veterans, but again, great flexibility, really expanded debt to income ratios, options for 0% down, no PMI mortgage insurance. So there's some great scenarios there. The next one for government is USDA. Now, these are ones we don't see as often because it's location specific for more of a rural living location, but occasionally these aren't as rural as you may think. So, and this could be, again, something allowing a zero down loan. But essentially, guys, the general gist here is government-backed loans were originally brought out to kind of help supplement the market. So if there was a little bit of a hole in that conventional market, well, the government wanted to step in and say, hey, there's different loan programs we're going to offer to help these different groups of consumers. So ultimately, I hope this gives you a little breakdown of, hey, what's a government loan versus a conventional loan? Within the buckets, what are different types of government loans or different types of conventional loans? How do these separate? Now, at the end of the day, no matter what option we look at, it could still be a 30-year fixed. It could still be a 15-year fixed, different types. So I don't think I would be super concerned of which one you end up with. It's going to be looking at the terms, the rates, the closing cost, and most important, the qualifying that each of these products brings with you. So as you guys do want to explore pre-approval or any other loan scenarios, this is something someone like myself can help you dive through. What's the pros and cons of all of these little pieces? But the fun part is there's multiple loan programs available, lots of different guidelines we can look at to always help find you the perfect structure. So with any questions, guys, please feel free to reach out. You can DM me below, but I hope, again, this gives you a little bit of an idea of what structures exist out there. Thanks again for tuning in.